Well, late this week, shares in REA Group, a sponsor of this program, fell heavily after its half-year profit results were released. On the face of it, the results were reasonable. The shares down 7.8% at the close. On a like-for-like basis, revenue ahead by 5%. Its net profit up 9%, $341 million, but that was short of the market's expectation. Even a $200 million share buyback wasn't enough to stem the share price fall. Now, you might sense the company might have been caught up also in the market reaction to the latest update to artificial intelligence, especially by the app Claude run by Anthropic, which promises less advertising interference in future AI feeds. Well, Cameron McIntyre is the Chief Executive of REA Group, and I spoke with him a little earlier.
Yeah, absolutely, Ross. I mean, we're very happy with the financial performance of the company. We hit all of our major milestones in terms of top-line revenue growth and earnings, which was great. The market overall is holding up very nicely as well. It's a bit of a two-speed market in property at the moment, but in terms of yields, the business delivered 14% yield uplift on PCP. Our buyer leads were up at record levels at 4-year highs, delivering about 2.5 million leads to agents a month. And traffic was at record levels too. So, as a business, we continue to go from strength to strength. We're investing heavily in areas like artificial intelligence and seeing great outcomes from that too. So, as I mentioned, everything's heading in the right direction, and we're happy with how things are going.
OK, I want to start off by going first off to some of the economic settings. The company in the past 12 months in particular would have been aided by 3 interest rate cuts and the tightness of the housing markets. That's pushing up prices. It means there's an interest out there for buyers and sellers, and that really plays into your business, doesn't it?
Yeah, absolutely. But I will say, people buy and sell property not just based on the interest rate cycle. I mean, people will buy and sell property based on changes in lifestyle, changes in job location. There's a bunch of reasons why people will buy and sell property. And in some markets, as I mentioned, it's a bit of a two-speed market at the moment. Markets like Perth and Brisbane in particular, where supply is very tight. Often people don't look to buy a property unless they see an opportunity to sell as well. So it can be it's a two-sided market, and it's not just around interest rates.
So I was going to say it's not just around interest rates, although obviously the Reserve Bank this week has raised interest rates. So that is something of a handbrake potentially on either future developers or indeed future investors wanting to get into the market with the prospect that there may be more. But then there's also even this talk about the changing of the capital gains tax from the government. Again, this couldn't be welcome if investors, say, for example, are encouraged to hang on to their assets and not trade them because of a changing capital gains tax.
Yeah, I guess it's too early to call how that capital gains tax change plays out, and even if it indeed does play out. But I guess from an REA perspective, anything that increases the velocity of buying and selling a property is good for our business. And sometimes a lift in tax may actually create more volume as well. So I guess we just have to wait and see. I think with the interest rate rise, most people would have had that factored in coming into the Christmas break, and in January we saw good demand in terms of people inquiring on property too. So I don't think that played out, but the capital gains tax change is potentially quite interesting.
OK, so then take me to the next phase, and that is the artificial intelligence piece. You talked about developing your own apps and your own artificial intelligence systems. Do you feel that there is an urgency that you need to have to develop those things because you could be disrupted by a future AI app which is able to scrape a whole bunch of data from all sorts of places, including your own site potentially?
Yeah, look, I think there's urgency there because there's opportunity there. I think, as a business, we've been investing in artificial intelligence for a long time, and over time, what the business has done is become more of an AI prime company. So if you think about the tools that we use internally and how people think about artificial intelligence, it's becoming part of the DNA in which we use to develop new product and insight and capabilities throughout the organisation. So the urgency on our side of it is the opportunity that creates in terms of developing a competitive advantage and bringing product to market in a much more accelerated rate to deliver better outcomes for customers and consumers. So, yeah, we think it's a great opportunity for us and our customers, and yeah, we're moving as quickly as we can.
Yeah, so you have some of the richest data of potential home buyers, you know, in this country, probably the richest. But the fact of the matter is, if a Google, an Amazon, an Apple could scrape that data and basically take that opportunity that you have, an Australian opportunity, to the United States, that seems to me to be a bit of a waste of Australian assets in some ways.
Yeah, no, look, I mean, when it comes to data, I mean, REA has been around for about 30 years, and so, you know, we have enormous amounts of data. So, you know, specific property-related data, data associated with our active members. We have a lot of data associated with our immersive experience type applications, you know, whether it comes to video and, you know, iGuide, 3D tours, etc., etc. And, you know, some of that data may be exposed to search engines, and some of that data is definitely not exposed to search engines. So, and some of that data may be easier to scrape, and a lot of that data either won't be visible or extremely difficult to scrape. For instance, video is very difficult to scrape. So as the consumer experience changes and evolves, you know, our data changes and evolves, and what we expose to search engines will remain different. But, you know, I guess at this point in time, we don't see a competitive threat. We're always alert, but you know, we see it more an opportunity.
Okay, can I just ask you on that subject? One thing that surprised me was your key competitor in Australia, which is Domain, previously owned by Nine, was sold out to CoStar. Now, to me, that business for Nine was where its richness of data was. It knew when people had money, it knew when they were buying homes, it knew when they needed new furniture, it knew they needed a whole bunch of stuff. That, in many ways, is one of the opportunities that you as an organisation have, isn't it?
100%. That is exactly right. And yeah, as AI becomes more prevalent and we develop new capabilities, such as conversational search, where you can have a more in-depth conversation with potential home buyers and home sellers. I mean, the opportunities that creates for us and our customers are immense. And over time they will become more prevalent, but I think that is potentially a source of competitive advantage over time.
So were you surprised in hindsight that Nine did sell Domain?
Look, I can't comment on the motivations for people buying and selling assets, but I mean, from my perspective, data is a key asset in any digital marketplace like ours, and it's something to protect and nurture and build over time, and it does create key competitive advantage. So, that's how we sort of think about it.
Cameron McIntyre is the Chief Executive of REA Group. And Cam, always good to chat to you. Many thanks for your time.
You too, Ross. Good to catch up. Thank you.